This side, Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting Group is a multinational headquartered group based out India, Singapore, and Hong Kong. More importantly, we are having offices in three parts of the globe. We own our own hedge fund, commodities platform, equity platform, our virtual comics platform, our OTT platform, over the top tier FX Academy, our trainings platform, our video platform, and there are a variety of products which we are offering. Probably by December 2022, which is 1.5 years from now, as an organization, we would be having more than 100 plus products to offer. So if you wish to have any information about our product line, you can definitely WhatsApp me, email me. The numbers are shared at the end of the video. This is a disclaimer, and I request the following people, please do not watch this video. People from newspapers, especially TV anchors, paid and sold media, the so-called legendary investors, venture capitalist firm, regulators, people who decided not to learn but blindly following others. They are also known as Bhakt or Anbhakt. Now, generally when people use the word Bhakt, the mind simply runs towards one political party. No, this is not a political video. By Bhakt, the definition of a Bhakt to me is that to whom 1 plus 1 equal to 22. So if somebody say 1 plus 1 equal to 22, then he is a Bhakt, because he do not understand that 1 plus 1 equals to 2. So all who are from newspapers, TV anchors, paid and sold media, legendary investors, venture capitalist firm, private equity, our so-called regulators, those who are trying very hard, but irrespective of that, the non-performing asset is more than 13 lakh crores. The frauds are going in the industry. The retail investor is losing every day, but they are working. People who decided not to learn but blindly follow others. They please do not watch this video. The purpose of giving such disclaimer is that they might feel offended. So there is a great probability that they might feel offended. So please do not watch this video. Practically speaking, there are 5 diamonds in life. Number one is definitely the patience. Majority of the people in capital markets, they don't have patience. If they are taking a position today, they are expecting this position would be profitable tomorrow. In fact, many investors expecting this to be profitable in 1 hour. That is the most important thing. And in the absence of patience, making a profit in the capital market is really impossible. That we need to learn. And by the way, patience is not one night stand. Patience is, you need several years to develop the patience. All the great investors of the world, just like Mr. Warren Buffett and all, they are having extreme patience. And extreme patience means that they know when to buy and how long to hold. They are not, I would say, they are not frustrated as far as the daily movements are concerned, to be very honest. Another important diamond in the life is the knowledge. By knowledge, I means the practical knowledge. There are a variety of degrees we have in the world, which is MBA, Masters of Business Administration, CFA, Certified Financial Analyst. I know they're writing charter, but actually it is Certified Financial Analyst. CPA, Institute, American Institute of CPA, and so many degrees. Third important life, which is definitely a blessings of God, is the Reuters and Bloomberg. The kind of information and the analytics you get on Reuters and Bloomberg, you will get nowhere in the world. Don't expect this level of knowledge on Google and all. There are many websites, without quoting the name, They claim that they are giving the live information, but the level of analytics you get on Reuters, on Bloomberg, these websites stands nowhere. I'm not saying that the Reuters and Bloomberg are perfect. Definitely they are not perfect. There are many loopholes we have in Reuters. There are many loopholes we have in Bloomberg. But for a while, if we ignore these loopholes, then they are the best platforms as we speak. But of course, I know that they are legacy-based platform. No one challenging them as of now. People don't have expertise, money, and the power to challenge them, so they would continue. Fourth important diamond in the life is the consistent learning. Knowledge is one thing. Consistent learning with knowledge is the most dangerous combination we have in the world. 99% of the people who take degrees like MBA, CFA, CPA, chartered accountant, company secretary, and variety of degrees we have in the world, they stopped reading the day they got the degree. But the market is changing at a very faster pace. I repeat that 2007 when I started my career in treasury function, and now 2021, which is exactly 14 years. In this 14 years, the treasury market changed completely. When we started in 2007, Reuters and Bloomberg were not what they are today. No one was talking about OMS, order management system. No one talking about EMS, execution management system. Forget people talking ECN, electronic communication network, and forget the LIBOR transition, IFRS, US GAAPs, gap accounting, and there are so many things. In this last 14 years, the financial market changed dramatically across US, Europe, and few countries of Asia like Singapore and Hong Kong. But unfortunately, when it comes to India, the financial market remains intact. Even today, many MBA institutions are teaching almost the same thing, like they used to teach in 2007. Knowledge plus the consistent learning is the most important thing in the life. So let us take a simplistic example in that regards, which is if you have Reuters and Bloomberg, but the market is moving from LIBOR to SOFR, which is secured overnight financing rate. The market is moving to Ameribor, market is moving to ONIA, American Overnight Index Average, and there are variety of new instruments, RFRs, risk-free reference rates. They are coming. But even though you have Reuters and Bloomberg, and you're not paying attention to these kind of products, you know that what the mess you are creating for yourself. So there is no purpose of having Reuters and Bloomberg. So the only purpose of Reuters and Bloomberg, or you will resolve the purpose, is once you are consistently learning what the hell is happening in all these things. Fifth and last is the challenge, which is the status quo. Status quo is the most important thing we have in the world of finance. This is the status quo, I am following this. This is the status quo, I am following this. What the hell? Did Steve Jobs follow the status quo? Had it been the world, definitely not having Apple. Did Mr. Bill Gates keep his personal life apart, what is happening, but just concentrate on the Microsoft which he created? Did he follow the status quo? Had it been, world won't have Microsoft. Larry Ellison, Mr. Warren Buffett, and examples are endless. If they followed the status quo, I'm sure that 90% of the Fortune 500 companies won't exist today. But they just went ahead versus so-called status quo, and rest we all know. The 5 diamonds of life in financial market is definitely the patience, the knowledge, the Reuters, the Bloomberg, consistent learnings, and the challenging the status quo. And I'm sure that 99% of the investors, at least if we speak from an Indian angle, don't have either of them. We don't have patience. We wanted to be an overnight billionaire. The day we took degree, we don't wanted to learn new things. We are really not interested in Reuters and Bloomberg, and it's not about the cost, but we are not interested in learning them also. Consistent learning is nowhere. We are completely dependent on media, newspaper, and the few selected TV anchors. And challenging the status quo is something we should not talk, because we born with the status quo and we continue with the status quo. Simple logic of the life. Welcome to the movie or the video called Indian Capital Market Legendary Investors. In Indian capital market, there are four kind of players. Number one is the listed companies. They are listed companies, but they are having full support of operators. And it is the moral responsibility of the operators to make sure that their stock price to grow. Corona, no corona, credit risk, no credit risk, falling GDP, rising GDP, unemployment, no unemployment, profitability, no profitability, but it is a moral responsibility of operators to make sure that the stock prices grow. Simple. Another is the listed companies, but they don't have operator support. They are having tireless management, hard-working management. They work for investors. They declare the dividends. They give profits. They work on cost cutting. They launch new products. But the only thing they do not do, which is mistake as per Indian capital market, is they do not beg before the Indian operators. I'm not quoting any name, but I know at least one pharmaceutical company in India, and I'm noticing this pharmaceutical company from the last 2 to 3 years. This pharmaceutical company's share price is almost intact from the last 2 to 3 years, and one FMCG company also. This FMCG company and pharmaceutical company is having a very ranged bound plus minus 5 to 10 rupees stock price, and both are profitable. In fact, this FMCG company in this quarter reported exceptional profit. And hats off, guys. When Chinese companies are in a very dire state, when majority of the startups of India are closed, when the loss-making companies are forced by their father, known as SoftBank and other venture capitalists, to raise the money, this FMCG company reported exceptional profit, but the stock price falling. Third is the unlisted companies. They are those companies, including me, they have decided not to list in India or anywhere. They have decided that we are not going to get listed because listed is a waste of time, excessive compliance, torture, and more importantly, you are under the radar of Indian operators. In the last 2 to 3 years, I have seen at least 10, 12 good Indian companies. One is in gas sector, one is in pharmaceutical sector, one is FMCG. Guys, this gas sector company is exceptionally asset turnover company. I'm sure that 90% of the people do not know what is the definition of exceptionally turnover company, asset turnover company. But their share price is almost 10 to 15 rupees of range. Go to hell the profit. And I'm sure that one of the biggest reasons behind many companies who unlist in India, just like Hexaware did and many others, is they are frustrated because whatever you do, Until otherwise, operators are with you, your share price will never grow. And fourth, my loving, very close to my heart, and I love them, is unicorns, loss making. They are those who are really not bothered. Regulator is in their pocket. They not worry about the government. Retail investors are blind. Loss making is not a consideration. More importantly, net worth is zero or not, that is not a consideration. So practically speaking, and one of them recently listed, which is Zomato, and many more are coming. So as if we speak from an institution angle, then the capital market in India is composed into four forms. One is definitely the listed companies, the with a great support of operators. Number two, without operator support, listed companies. Number three, unlisted companies, very good companies, but they do not want to enter into the market because they know they get tortured. Number four is our loving unicorns. So let's start with the listed companies with operator support. You have a listed company whose revenue is 1/100th of a revenue of a big company. So without quoting the name and without quoting the sector, in a relevant sector, one big company earns 100 rupees, and in the same relevant sector, one very small company earned 1 rupees, which means that 100 is to 1. So the big company earned 100, they earned 1. The very big company in the same sector earns 166 rupees. So they earn 166 rupees and small company earn 1 rupee. But the stock price of that small company is 33% of precisely 42 to 45% of that big company. So that big company who earns 166 rupees and the small company who earns 1 rupee, but the stock price of that small company is 42 to 45% of the big company. Go to hell, the revenue. And if we compare the cash profits which this big company is earning, I think the value of a small company is lesser than the cash profit this big company already which is known as reserves and surplus in their balance sheet. Or if I take the reserves and surplus in the balance sheet, then this company is not even on an enterprise valuation basis equals to the reserves and surplus. So this is the listed company. Operators definitely having interest. Always remember that, guys. Operators can only have an interest in the company till the time management is interested. If the management of the institution is not interested, operators cannot do anything. If any organization, we know that history is a witness in the Indian capital market, many scams happen. Infrastructure leasing and financial services, Diwan Housing, Yes Bank, PMC Bank, and list is very long. In all cases, the modus operandi is intact, which is the senior management is with the operators. Whether this is Diwan Housing, it is infrastructure leasing, the Yes Bank, our loving Rana Kapoor, PMC Bank, the senior management was completely aware that what the hell is going on in the system. And do not talk about auditors and credit rating agencies because they are very honest people. Please don't talk about them. So if any listed company share price is exorbitantly rising, it only reflects that the operators are having a deep interest in this company. And this is not possible until otherwise the management is involved. There is a very good line we have in one of the Bollywood movies called Khaki. I love few Bollywood movies. They are very handsomely made, just like, Khaki and Lakshya. They are very motivating movies actually. So, Mr. Amitabh Bachchan in this movie, in the middle of the movie, when he was struggling to fight with his own system, Mr. Amitabh Bachchan made a very good statement, and he said that if the government allows and police want, then no one even can pick your sandals outside the temple. Forget big frauds and all this mafia and all. So Mr. Bachchan said if the government allows and police is with you and police really wants to work, then no one can even steal, a sandal from outside the temple. This is what he said in the movie Khaki. And we know that in all the major scandals which happened in India, outside India also, just like recently if we take, which is Wirecard, where my favorite auditor is involved. The only thing, the one good common point is that the auditors and the credit rating agencies were clearly aware about this mess up. Clearly aware about this mess up, but they were tight-lipped. And results, investor lost. So there is a listed company, a big company earns 160 rupees. That's a real example. You can guess to which company I'm talking. They earn 1 rupee, but the stock is rising, 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 and there are a hell lot of companies we have similar companies, to be honest. Stock price rising. Few days ago, a selected stocks, they were rising, 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 and now they are falling, falling, falling. No one knows the reason. They create artificial demand. I'm not going to be cover the artificial demand in detail. It's a part of our operators course. So basically there is a way how to create an artificial demand, and it is next to impossible for a retail investors to understand how to identify an artificial demand. There are variety of ways we can create an artificial demand, and the retail investors will never get to know. Of course, if you create an artificial demand, end result, the stock price will rise and the retail investors will enter into this price because they think that a stock which was at 300 goes to 400, then 500, then 600, eventually it goes to 1600 and still moving up, up, up. It means something is going in the stock. The intelligent people wait and watch and see, guys, hold on, hold on, hold on. Just look at the balance sheet of this company. Look at the balance sheet strength of this company. Check this company, the kind of business they are up to, and so on and so forth. And they don't enter into this stock. But few enter into this stock in the form of cash, in the form of F&O, and rest Prices rise in stock prices, sometimes they are only in two kind of sectors. One is the high demand sectors. In India, the high demand sectors are always software, real estate, and banking. These three are high demand sectors: software, real estate, and banking. Or other are thematic sectors. Sometimes the sectors are thematic. Example, nowadays it is, electric vehicles. Nowadays it is, I would say the so-called IPO of the loss-making companies, thematic sectors. Or this is how a listed company work, who hold the operator support. The other kind of listed companies are those listed companies, those who do not have operator support. They list, they have a very good business model, they work hard, they, take the money from the people, they invest this money in the working capital or their projects. Their management is very hardworking. They launch new products. Consistently, they give revenue guidance. They do the cost cutting if possible. They give you the EPS guidance, which is known as earning per share, all three kind of EPS, which is basic EPS, diluted EPS, and adjusted EPS. And they are investor pro. If there is any, possibility, they give the dividends also, if there is a possibility. They are very hardworking management. They do not have any operator support. Like I said, in India, we have at least three companies I know, one in FMCG, one in the gas sector, and one is the pharmaceutical sector. They are they are fall in this category, to be honest. But the hard reality is that the business channels always give negative or zero coverage to these companies. Always. One of the so-called Bloomberg columnists wrote that Vodafone India should be nationalized. Bloody hell. What do you know about Vodafone? And how can you even write that Vodafone can be nationalized? Did you check with Vodafone whether Vodafone wanted to be nationalized? Did you check with the parent of Vodafone, which is Vodafone UK, they wanted to be nationalized? Did you check with the private investors, those who are in talk with the management of the Vodafone regarding the funding? Did you check with the good asset quality which is lying in the books of the Vodafone, you know, that they wanted to be nationalized? But I am a Bloomberg columnist. I can write anything. I can write anything that Vodafone can be nationalized. Go to hell. Because I am a Bloomberg columnist. Since I am a Bloomberg columnist, so whatever I am going to be writing, people will treat this as a Satyavachan. And why people treat this as a Satyavachan? Let me read this for by a so-called Andy Mukherjee. Andy Mukherjee is a Bloomberg option columnist covering industrial companies and financial services. He previously was a columnist for Reuters. He was also worked with the State Times, ET Now, and Bloomberg News. So let's read. The world's cheapest data cost have done wonders for India by helping to spread the benefits of internet beyond a city. This. So ultimately, what this person trying to say in short, he's saying the Vodafone should be nationalized. Very good, sir. We take your point, and tomorrow we will speak with the Vodafone management that Vodafone should be nationalized. 99% retail investors will only see. Oh my God! Andy Mukherjee wrote an article. Bloomberg columnist wrote an article. It means government of India would be infusing whatever money in Vodafone. Government of India is buying Vodafone. Andy Mukherjee, first give the facts. In your whole article, you not even talked about the balance sheet of the Vodafone. First learn. They are those people who always give negative opinion about good companies. But according to Andy Mukherjee, except Vodafone, there is no company in the world, in India specifically, who is struggling. All companies in India except Vodafone are having zero debt. All companies in India except Vodafone are profitable, and Zomato profit is equals to the profit of Amazon US. So Andy Mukherjee not got the time, but Andy Mukherjee not got the time, rather he is not interested, rather he asked not to write on Zomato. But we will definitely be covering, Vodafone. Because Vodafone is a company who, with due respect, do not have a management who can counter such people. That what the hell you are talking about me? Did you look at the other companies of India? And second is our newspaper. They love criticize few selected companies. And all other companies, those who are in a heavily loss making, they never write anything about them. Like when Zomato was about to list few days ago, one of the one of the media anchor said Zomato is having 375,000 restaurant. Bloody hell. Out of 375,000 restaurants which are listed on Zomato, how many are actually live now? It's been more than 1.5 years of COVID. As we speak on 31st July, we know that what the hell Delta variant is. In US, who used to say on 16th June that, like Mr. Amir Khan said in Three Idiots, all is well, all is well. And now this, what the hell Delta variant is, we all know. How many of the restaurant out of 3.75 lakhs are really live now? How many of them are really struggling even to pay the salaries? Guys, just open the Google and check Hyatt Mumbai. Basically a hotel. I don't think I need to explain Hyatt to you. Hyatt is having a hotel very, very close to the Mumbai International Airport, Sahar. And in this Mumbai International Airport, what did happen in the last 2 months? 2 months ago, they were clear that they not been able to pay the salaries to their employees. I'm not criticizing Hyatt. I know that the situation is tough. I know that the scene is little messy, and Hyatt is not an exception. This is a situation of Hyatt, a big brand worldwide. If they not been able to pay salaries to their employees, with due respect, what about 3.75 lakhs restaurants? But how media say 3.75 lakh restaurants are listed with Zomato. It means in the next 10 years, Zomato is going to be the next Apple. So buy today and be a billionaire. Irrespective of knowing out of 3.75 lakh restaurants, how many are actually working today. As we speak, Karnataka is in lockdown. Some news about Chennai. No words about Kerala, and so on and so forth. So these companies, those who are listed, but they don't have any operator support, the management is hardworking and everything, but it's all taken at granted. But the management sleeps with one notion, like Steve Jobs always used to sleep with one notion: we are working. And I think that's more important. So, what is the benefit of the business channels and newspapers to promote these companies? They get advertisement revenue, no doubt about that. They get, in fact, heavily advertisement revenue. They getting anchors contract. Anchors are getting contact with the industrialist. I tell you one real story. You know that I worked as a corporate treasurer for American companies for almost 10 years. In these 10 years, I interacted with almost every bank. You name the bank and I interacted. HSBC, Deutsche, Barclays, Goldman, JP Morgan Chase. With JP Morgan Chase, we were interacting almost daily. I interacted with all foreign banks in this 10 years, and now having a very good relationship with, these banks, and I learned a lot from these banks. In fact, today I'm on their mailing list as far as their research reports are concerned, and I know that hardly anyone reads about research report, but I always take a printout and try to read whatever best I can do. I can justify their research reports. Goldman and JP Morgan and HSBC, in fact, their research reports are wonderful, no doubt about that. The kind of work they do is exceptional, to be honest. In this banking world, when Corona was not there, before 2019, I'm talking, there used to be many banking conferences, basically one-to-one banking conferences. Some are happening in Singapore, some happening in India, and some happening in Malaysia. I traveled almost the whole Asia, except one or two countries in Asia. I traveled the whole Asia, almost whole Asia. In these banking conferences, you always see the media people. Always see the media people. Hardly there is any banking conference you don't see the media people. And these banking conferences, these media people are specifically covering selected corporates. Just like I give you an example of, I don't want it to quote, but there is a big, I would say, big training firms. Used to be a big training firms in Asia, but now they are no big because of their stupidity. They used to conduct an annual event in India in November. You can guess what I'm talking about. And they used to conduct one annual Asia event in Singapore. In both the events, I used to go, and I spoke as a speaker many times. And outside their event, basically outside their event, there used to be media. And there used to be their own YouTube channel people. They used to promote the selected corporates. And they used to shoot the video and upload on the website of these companies, websites of these companies and their media houses, which in turn gives, a limelight to these corporates. And you know that when corporates are in limelights, it's a world of reciprocality, which means that you give and take. One hand you give, another hand you take. So from that conferences, and it's not about one conference and two conference. You know that I'm a speaker and I got around more than 100 plus mementos, and I hardly paid for any conference. I earned the way I speak. I always speak. Even today, the kind of video I'm covering, I always saw that very early in my life. I learned that how these media houses are connected with the corporates. So why the business channels and the newspapers are promoting few selected corporates is first definitely the advertisement revenue. Many a times you even also saw that selected corporates or media houses or TV channels, they continue to get the advertisement of the company even though the company is in trouble. And only one selected media or I would say or a TV channel will get such kind of advertisement. Anchors get a very good contact, which is also known as industry contacts. They get free passes to the corporate houses. They sometimes get a contact of the politicians also. And many a times these media and business channels having undeclared stake in these companies. This is also a reality. And round tripping is, I'm sure that 90% of the people even do not know that what the hell is round tripping. Round tripping, very soon we have one small video, but detailed video would be only for our course people. These are not the only reason. There are variety of reasons which we have in the world as far as the why these few selected corporate houses and the media are always in sync with each other, and they would continue to be, guys. Please don't expect there is any change to happen. There is a world of unlisted companies we have in India. And even I get several emails and WhatsApp messages, and nowadays are getting LinkedIn messages where you're being pushed to invest in unlisted companies. And many a times people invest in unlisted companies without doing the due diligence on the unlisted companies. Few selected way how these unlisted companies are promoting is definitely the emails. I get email, WhatsApp messages, LinkedIn messages, YouTube channels. There are various YouTube channels which we have without quoting the name. They continue to promote the unlisted companies and definitely the venture capitalist firms. And we definitely have a detailed video on that, the how venture capitalist firms are interested in the unlisted companies, and more importantly is the offshore sub account. Not many of you understand that what is sub account. And please don't mind, in this video we are not going to be covering sub account in detail, but there is a concept called offshore sub account. In this offshore sub account, there is an entity who is extremely interested in the unlisted companies, and sometimes they promote also. But people don't have that knowledge. Since people don't have that knowledge, so they do not know. But as we speak, that unlisted companies are definitely having of great interest. There is no doubt about that. And they are being promoted emails, WhatsApp, YouTube channels, operators, venture capitalist firm, and offshore sub account. And this is the favorite part of my video always. Few loss-making unicorns, those who are getting listed, and one of them already listed at 1 lakh crore worth of valuation. 1 lakh crore. Immediately after the listing, they are in the top 50 listed companies of India. In accounting, there is a concept called net worth. Those who do not know what is net worth. Now, net worth is your total equity capital plus reserves and surplus. Of course, we assume there is no losses. If a company, Paytm, Ola, Uber, Swiggy, Zomato, Flipkart, and all these companies, Lenskart, and all, if they continue to accumulate the net loss in their books every year since inception, how can their net worth is not zero or negative? I still remember Steel Authority of India. Few years ago, I was watching one business channel. In this one business channel commented that Steel Authority of India, shortly known as SAIL, is in loss. And since they are in loss, their net worth is going negative. At that moment, the India was facing unicorns, so no one ever thought that it's a big how the mess is going to be. But if this net worth logic applies to Steel Authority of India, then why it not applies to these unicorns? Or does that mean that the world of accounting, in fact, two leading giants of accounting, which is IFRS and US GAAP, which is International Accounting Standard Board, Financial Accounting Standard Board, they have different accounting principles for unicorns, and they have different accounting principles for all management, those who are working for profit. It means that because say for Steel Authority of India, due to consistent losses, the net worth is negative. I'm talking about few or old story. Then this is not applied to Paytm, Ola, Zomato, Flipkart, Uber, Lenskart, and what not. Oh my God, Udan, please. Delhi Valley, you know. What about the ownership structure? Who owns these companies? And what the hell is SoftBank? Did you ever check the balance sheet of SoftBank? They're only running on the paper valuation. Remember, guys, Uber, 100 billion valuation. 100 billion valuation. Remember Airbnb? 50 billion valuation. And remember our loving WeWork, 25 to 30 billion valuation. Remember Oyo? 15 billion valuation. By the way, where is Ritesh nowadays? I think Ritesh is might be traveling, or maybe he's enjoying because he's not in the media nowadays. But I'm sure that Ritesh must be evaluating to list Oyo, because after all, after a few years, Oyo would be next Apple. We all know, because since inception, Oyo is in heaven profit. The total profits of Oyo plus Paytm plus Ola plus Uber plus Zomato plus Flipkart is equals to the total profit of US listed companies. Do you know that? You should know that. You know, guys, in startup, I was startup 5 years ago. There is a concept called the founders control a majority of stake. Let's take an example of Steve Jobs and many other examples. The founder always control the majority of the stake because the upfront founders, they always wanted to do something innovative, and they don't want it to be in the tied hands of venture capitalists, so they do all new things, so they keep a good stake. You know what had happened with Steve when he was asked to step down, and a lesson being learned by the people, Mr. Bill Gross, and so many examples. How much is the founder stake in these companies? I still remember when Walmart paid heavily for Flipkart. Many paid media houses came and said that it is because of the phone pay they paid. And I'm sure that today phone pay is the largest profitable payment gateway in the world. Oh, sorry, wallet in the world. Phone pay profitability is more than any profitability of any other company. And still, Flipkart is looking to list at 40 billion valuation. Several articles on the Google claim their valuation is 40 billion. 40 billion! If valuation is 40 billion after losses, then the day you get profit, hope so, as per media, then you would be, it would be 4 trillion. In India, We have another category called legendary investors. I think this name should be reserved for Warren Buffett and one or two. But you know that I'm no one to decide because unicorns. Legendary investors plus media plus brokerage houses. Let's give few examples. Very latest example. One of the legendary investors sees Sensex at 2 lakhs. Very good. It is around 50,000 today, which means 4 times, I'm sure. And one see Nifty at 90,000. Nifty is around 15,000. 90,000 means 6 times. One see Indian economy would number one by 2025. In the world of Delta variant, you are not sure what is going to be next month, but we know that we are going to be number one by 2035. That we know. One legendary investor see one selected stock to be an electric vehicle by this year. How? I don't know. You please ask him. One see the bull run is coming. Foreign institutional investors are pumping out, taking money out. Domestic institutional investors are forced to pump the money, but bull run is coming. One say you invest this money and you be billionaire or millionaire or get 1 crore via SIP. How? After 10 years. We don't know what would happen after 1 month because of the Delta variant, because of the corona and so many factors. And don't forget the climate change, please. But yes, our money would be 1 crore after 10 years. That is sure. This is how the legendary investor worked. Keeping this as a backdrop, the biggest problem is definitely the retail investor. He's like, comments are coming from legendary investors. Business channels are continuously giving buy this, sell this, buy this, sell this. Newspapers, we know how newspapers covered Zomato. And I'm sure that the way would be covering the Paytm also. Delhi Valley and all upcoming. We know the media, YouTube channels will continue to push selected stocks. Buy this, it would go to this level, sell this, it will go to this level. Unfortunately, the hard reality of Indian retail investor is that majority of the Indian retail investors do not have knowledge. They do not know how to track the market. Neither they do have the patience, and they pay heavy price of that. And most of the retail investors wanted to be an overnight billionaire, which means that they wanted to be as rich as possible. And this eagerness of getting as rich as possible, they pay heavenly price of that. Heavenly price of that, let it be honest. And this is really very important, and we need to learn that. In fact, retail investors need to learn that. How can we keep a tap on that? Legendary investors are misguiding business channels, newspapers, media, YouTube channel, zero knowledge, and the thrust to become overnight billionaire make retail investors lose every time. And majority of the losses never reported. Because the media will continue to say, had you invested in this stock, it would be 20 times after 5 years. Where is balance sheet? Don't talk. Don't talk balance sheet. These are our credentials. You know my number. Majority of the people know my number personally. I always give my number personally. And my platform www.fixedincome.global. Guys, as I speak, and my website, my email address. As I speak, let me give you one data which I collated from Google. From January to March 2021, which is also known as the first quarter of a calendar year, the total profits of Apple is around 23.5 billion. 23.5 billion is the total profits of Apple only in the 1 quarter of the calendar year. The total profits of Google is around 14.7 billion. While on the other side, Microsoft is very close to Google, it is around 14.5 billion. While Facebook is around 9.5 billion. 9.5 billion. And if I compare with Amazon in the first quarter took around 8.1 billion. If I only compare the 5 companies which are also known as FANG, Apple, Google, Microsoft, Facebook and Amazon, only in the 1 quarter of calendar year, they earned about 60 billion, close to 60 billion as a profit. 60 billion as a profit. And guys, the very important thing is that in case when we talk about net income, Apple recorded $23.5 billion, but the net income increases by 108%. Google earned 14.7 billion, the net income grew very close to Apple, which is around 98%. On the contrary, Microsoft the profits is 14.5 billion, very close to Google, but net income grew by 34%. In case of Facebook, it is 93% and Amazon way beyond 220%. This is called business. And this data is collated by the Bloomberg. And this is the 5 company data. What would if you take the whole Standard & Poor? But don't worry. One day, Indian unicorns would be next Apple. Please be rest assured. Media already confirmed you that. Please be rest assured. These are the few suggested readings, like The Margin Call. It's my favorite movie. It's a Hollywood movie. This movie talks about the Lehman Brothers crash and how the so-called regulators, credit rating agencies, auditors were completely unaware what the hell is going to happen. Another my favorite movie, I think it is on Amazon, which I watch every time. It's a bit of adult movie, but I love to watch every time, which is The Big Short. It tells you that, no, it's not adult actually, a little bit adult is The Wolf of Wall Street. But The Big Short tells you that how one person, originally known as Mr. Burry, Michael Burry, he envisaged the housing crash way before any so-called regulator did that. And he ended up making a good money of around 2 billion plus, but he was harassed. And the so-called credit rating agencies, always remember a dialogue in The Big Short, which is that when 2 gentlemen went to one credit rating agency, you please go to this movie and check which credit rating agency I'm talking. When 2 gentlemen went to credit rating agency and they said that this is what it is going inside the system and you are like a blind eye. They said, if you don't give the rating which my client is looking to, my competitor would give the rating. This is in the movie. Another suggested reading is definitely the Harshad Mehta story, which is on Sony Live. And 2 favorite Indian movies, which gives you a complete example of how operators work, especially the movie like Corporate. Although the movie Corporate, I think it is by Mr. I don't know the name of the director, but this movie talks about how 2 companies are vying in FMCG space and how they use operators to influence their stake in each other. Another beautiful movie is The Page 3. This movie also talks about that how exactly media works. They only show what they wanted to show. This is called TRP. I request people to have this. I'm sure that many of you watched Margin Call, The Big Short, The Wolf of Wall Street, The Sony Live, The Corporate, Page 3. There are many such movies being made. But of course, people don't have time to read them or to listen to them. At the end, take my quote. If you are not knowledgeable, then so-called legendary investors, business channels, newspapers, regulators, they are working very hard, but somehow the NPA is growing, but they are working. Media houses, and of course, the newly joined YouTube channel, Generation X. Very soon we have this video on this topic also. They are ready to sell your home. Please remember that you need to be knowledgeable. If you do not know, if you're not self knowledgeable and you are dependent on these legendary investors, business channels, newspapers, regulators, media houses, the of course the YouTube channels who are very good in editing and all, then you know where are we heading. This is my quote. If anyone feel offended, I shared my number, give me a call and I'll tell you how you feel offended. But before calling me, calculate the value of your company and calculate the value of all loss making companies also. This is Rahul from Treasury Consulting Group. Have a great time ahead, guys. Talk soon. Thank you.